Fundamental analysis is a method of evaluating a security's intrinsic value by examining related economic, financial, and other qualitative and quantitative factors. It is commonly used in the analysis of stocks, but can also be applied to other financial instruments like bonds or commodities. Here are some basic components of fundamental analysis: earnings and revenue, earnings per share, EPS. This is the company's net income divided by the number of outstanding shares. It gives an indication of a company's profitability on a per-share basis. Revenue growth. Increasing revenue over time is generally a positive sign. Financial statements. Income statement provides information on a company's revenues, expenses, and profits over a specific period. Balance sheet shows a company's assets, liabilities, and equity at a specific point in time. Cash flow statement details the cash inflows and outflows over a given period. Dividends. Companies that pay dividends can provide a steady income stream for investors. Analyzing a company's dividend history and its ability to sustain or grow dividends is crucial. PE ratio, price to earnings ratio. This ratio compares the current market price of a stock to its earnings per share. It helps in understanding how the market values a company's earnings. Debt levels assess a company's debt in relation to its equity and overall capital structure. High debt levels may indicate increased financial risk. Management and governance evaluate the competence and track record of the company's management. To evaluate a company's fundamentals, you'd typically start by looking at its financial statements, industry position, and other relevant factors. Let me provide a simplified example of how you might assess a company's fundamentals using a hypothetical scenario. For this example, let's consider a fictional company called ABC Corporation. Financial statements. Income statement. Look at ABC Corporation's revenues, expenses, and profits over the past few years. Check for consistent revenue growth, manageable expenses, and increasing profits. Balance sheet. Examine the company's assets, liabilities, and equity. A healthy balance sheet should show manageable levels of debt, sufficient cash reserves, and positive shareholder equity. Cash flow statement. Analyze the cash flow from operating activities, investing activities, and financing activities. Positive cash flow from operations is generally a positive sign. Earnings and revenue. Check if ABC Corporation has a positive and growing earnings per share, EPS, and revenue. This indicates that the company is making money and expanding its business. Dividends. If ABC Corporation pays dividends, assess the dividend history and payout ratio. A consistent or growing dividend and a sustainable payout ratio could be positive signs. PE ratio. Calculate the price-to-earnings ratio, PE ratio, for ABC Corporation by dividing the current stock price by its earnings per share. Compare this ratio to industry averages to determine if the stock is overvalued or undervalued. Debt levels. Evaluate ABC Corporation's debt levels by looking at the debt-to-equity ratio. Lower debt levels are generally preferable as they indicate lower financial risk. Management and governance. Research the company's management team. Look for a track record of successful leadership and adherence to good corporate governance practices. Industry and market conditions. Consider the industry in which ABC Corporation operates. Analyze how external factors such as economic conditions or technological advancements might affect the company. Competitive positioning. Assess ABC Corporation's competitive advantages, market share, and the quality of its products or services compared to competitors. Ratios. Calculate various financial ratios, e.g., current ratio, quick ratio, return on equity, to gain insights into ABC Corporation's financial health and operational efficiency. Analyst reports. Review research reports from financial analysts for their insights and opinions on ABC Corporation. Also, look for transparency and adherence to corporate governance principles. Industry and market conditions. Consider the broader economic environment and the specific industry in which the company operates. Changes in these conditions can impact a company's performance. Competitive positioning. Analyze a company's competitive advantages, market share, and the quality of its products or services. Macroeconomic factors. Consider broader economic indicators like interest rates, inflation, and unemployment, as these can affect the overall market and individual companies. Ratios. Various financial ratios, such as the current ratio, quick ratio, and return on equity, can provide insights into a company's financial health. Analyst reports. Research reports from financial analysts can provide additional insights and opinions on a company's prospects. Fundamental analysis is a comprehensive process, and no single metric should be relied upon in isolation. Investors often use a combination of these factors to make informed decisions about whether to buy, hold, or sell a security. It's also essential to keep in mind that the effectiveness of fundamental analysis may vary depending on the type of investment and the investor's time horizon. The content of this video is not an investment advice and does not constitute any offer or solicitation to offer or recommendation of any investment product. It is for general purposes only and does not take into account your individual needs, investment objectives, and specific financial circumstances.